92% of the S&P 500, according to your own data, is now above its 200-day moving average. We've been hugely strong. Is there a risk of a pullback, maybe significant one, in the coming months?
Significant, I don't think so. Smaller one, possibly, maybe, probably. But in the meantime, the risk is more to the upside. You know those adages as well as anybody, Brian. Don't fight the Fed, don't fight the tape. And that's what people have been trying to do that are bearish. The Fed, not thinking about raising rates, anchored at zero, there to do whatever is necessary at the ready. If the fiscal guys can't get it together, they'll do more. Don't fight the tape. You cited the fund strat statistic earlier. Here's another one for you from Strategas. November was the best November since 1950. If you look at the top 10, number 2 through 9, 7 of them up, 2 of them down, average gain 3.2%. The path of least resistance is higher. Now, we're overbought. There's no question about it. You look at investor intelligence, you look at put-call ratios. At some point, we'll have a pullback. Bull markets don't go straight up any more than bear markets go straight down. But the path of least resistance, I think, Brian, is still higher.
Yeah, I mean, and we just talked to Steve Leeson about the potential for fiscal support and fiscal policy. And I know Congress is dithering. I tried to be a little optimistic about Congress because a lot of people don't realize that we actually have the most narrowly divided government in more than 100 years, which means they're going to have to likely work together. Are you optimistic we might get something, whether it's infrastructure, a fiscal support package, whatever it might be, from this Congress and the incoming president-elect?
The first thing to point out is we didn't get the big blue wave, and markets were fearful of that. The big decline in September, the 7% decline in the market the week before the election, Brian. That's what people taking money out. When the blue wave comes and the market goes down, I'll put it back in. Of course, we didn't get the blue wave. My hope is they do find some common ground. We're not going to get the radical $4 trillion increase in taxes, $6 trillion increase in spending that was in the Democratic platform. We're going to get things more at the margin. Remember, Joe Biden and Mitch McConnell spent a lot of years together in the Senate. I hope they have a lot of breakfast, lunches, and dinners and try to figure out what can we do at the margin to move things forward. The election on January 5th will have a lot to do with this, Brian. The Democrats win both of those, and we're going to get a bigger stimulus bill. The Republicans win even one of them, and Mitch McConnell's $500 billion bill is going to be more there. So we'll get something. We just don't know what yet.
There are some long-standing relationships, and unrelatedly, a few weeks ago, I think I tweeted out that the 15 longest-serving members of Congress, Bob, have a combined 535 years in office. That's just the top 15. So hopefully they've been able to build, I know, it's unbelievable, some relationships in that time. Any sector of the market you like more than others right now, Bob?
So I think the action in the market is in the common factors, and you've covered this. For almost a decade, you wanted to be big U.S. defensive growth stocks. I don't sell all of those, but I also need some small value, cyclical, international names in my portfolio. I think it's going to be more interesting for stock pickers as a result of that combination rather than so monolithic where we were for too many years.
Shepard Smith here. Thanks for watching CNBC on YouTube.